Real mortgage questions. AI answers. One broker who tells you what it actually means. I'm Edward Brady, a chartered financial analyst and broker at eXp Realty. Opinions are my own and not that of eXp Realty, its management or staff. This is Mortgage Questions. Let's get into it.
Now we're going to talk a little bit about sellers who want to rebuy. I think this is your sweet spot here. And so a lot of sellers, they're looking for a house, they want to do it at the same time, but that could be possibly risky. But what strategies actually work, and which ones cause the most stress or cost overruns?
So now we're talking about a step-up buyer, right? You're selling at the same time. I actually have someone I'm working with right now, and it depends on what is needed. For example, are you someone who needs the proceeds from the sale to purchase the other one? Are there ways we know because of maybe the market you're in that your house is going to sell right away? Or are there things we need to do because maybe it's not as competitive as other properties on the market? So different options we could look at: bridge financing, or we could buy the property in the location you want to, whether it's in your close local area or if you need to move wherever you're moving to. We can do some type of bridge financing. And then once that property that you're currently living in sells, we could just use that to pay off the bridge loan. Or purchase with a contingency. We have to wait until you designate your property you're going to move into. We could do that strategy. Depending on how much assets someone might have, we could do some type of delayed financing. You're purchasing in cash and then doing a refinance, a cash out refinance on the property that you're going to be moving to. So there's different strategies that we could use for a buyer looking right now who's stepping up to a new property. It just depends on what equity we have to work with. I think sellers are looking at is, how can we still protect liquidity? How can we leverage that to buy our new property?
And what do sellers usually underestimate most?
I think a lot of it has to be with an old mindset of what my property used to be valued at during certain periods, depending on when people see this. Right now, we're a higher environment. A few years ago, we were in the COVID area where properties were valued really high. Since then, properties have adjusted, have leveled out in certain markets. And so it's seeing that mindset that they might think that their value is more versus what it might be now. And so that could be a pain point of getting it to agreement, maybe in a contract, or understanding how much of that equity we can leverage to use for that next move.
So we touched on bridge loans a little bit in your last answer. That's a really interesting topic, and they can genuinely be useful, and they are a tool. But I'm just going to tell you a scenario. A couple, and they'd already bought a house, they had the bridge loan, and now they were desperate to sell the other one because they're making two payments.
So one of the things I would look at is every bank has a different type of bridge loans. I know some banks have two payments where the borrower has to carry both payments. It might be favorable for some, depending on the type of bank. It's short term. You're having this bridge loan for a period anywhere typically from 6 to 12 months. Maybe it takes you longer, right, to sell that home. It might be harder for you to continue that bridge. Again, that's where I've seen it be a little bit more of a pain point for borrowers who are trying to use this loan.
Okay. We talked about bridge loans. What other options are there? So somebody doesn't want to sell their home and then move into a rental while they're looking, but they want to buy. So other than a bridge loan, what other options do you have in your tool belt?
Like previously talked about, another option we could do is delayed financing. So this is typically you purchasing the property, the full amount, and then later it's pretty much you doing a cash out to now get a loan on that property. So it's another strategy we can use to help clients purchase in maybe a market or that's more competitive and they don't want to wait on the property.